Patron, take them away.
And a warm welcome to one and all. It's first time here. I'm the big fella Scruff. And yes, the video is going to be a bit jerky and a bit sort of uncharacteristic to what I normally do because I'm just on a laptop while I'm here on holiday. Because of the time shift, it's actually very early morning over here. So it's like 9:30 for you, but it's 7:30 for me. And just stirring, and the wild wonder's still in bed. Wait, wake up. You're awake, are you? All right. Well, remember, you can't come this side of the camera. She's got no clothes on, boys and girls. She's got no clothes on.
Yes, I
have. You? No, you haven't. Pull that sheet down.
You've been on your train.
Well, pull that sheet down, and I think trading can wait. No, sorry, boys and girls. Got to be a bit careful, you know. Can't make it too X-rated. I mean, I get wrong with all the silly things that I put on at the best of times anyway. So let's flick it over onto the charts and see what we're looking at. Well, we're kind of looking at two markets today. One of them's cable. Obviously, this one. I trade this every day, to be honest. And it's having a stall point now in and around this area. Now, if we drag this out to the hour, and we can see, you can see it's had a nice run up, and now it's flushing. But look where it stopped. It stopped dead on that fib. And that fib runs right across onto this. Now, if I drop in some entry-exit criteria, which is all the way down here, we'll see it's in the golden zone. So this is a nice place to start putting your orders. In fact, we could probably put an order into this right now. Put it under the current candle. Now I'm going to change it slightly. And what we're going to do is we're going to open up two trades at once. Or two positions at once, rather. And I'll just explain that as we go. I'll just get these set up. That's it. Okay. So if I flick that off, and I'll kind of give you the premise of what this trade is as well before I explain the orders, and then I'll look at the next one. Strong drive, retracement. Strong drive, retracement. But this was sort of gathering pace, you know, because if you look at these reds, they are significantly stronger than the greens, okay? And it's been building up, and then eventually it's starting to collapse in here. And the reds are starting to become more than the greens, but also pretty chunky. But then when these were coming in, they're not that strong. So there had to be a reaction point, and it looks like it's in and around this area. Might even push it up to this one, but at the moment it's in and around here. So that's the premise of this trade. Take this down to 5 minutes so we can see it. Now we're in. Now the idea of this is you have one with a grip big whopping target. Maybe he's down here somewhere. And you have the other one that you just work with. Now you might want to say 20 pips. So there's 20 pips. All right. So what's that got to do with a slice of bread? Well, it just means that you're not overly managing the trade. You're letting the trade do the work for you. Now, as time's going by, I am looking for a wage increase this year, and my account's done well. I can now start moving up, and I can safely take on around £30–35 a point. In other words, it's an increase of 10 quid. So it gives me a little bit more maneuverability with my orders. But I'm still not stupid. I still won't go in heavy. I'll put the first order in. Then if it goes against me, I'll put the second order in. but it also means that I can split orders quite comfortably now and get half decent return for it. So that's the idea of that. Now also, I'm keeping half an eye on cable. Now cable's pushing up, and I've got this marked out here. Still a lot of signs to the upper side, so it might be up here. So I want to see it either break under this. Let me just widen that out for you. Sort of come back under here or get back up here. So let me just drop this to 15 minutes so that I can show you what I'm talking about. You can see it's pushing up, but it's still there. And I only like to trade one asset at a time. So I'll keep half an eye on this, but if cable pays me, well, then cable pays me. But that's still pushing up, but I would like to short this. If I just drop it to 5 minutes, we'll see it's in and around this zone. It's the jury's out on it at the moment. So what I'm going to do is I'm just going to keep this half an eye, but in the meantime, I'm going to be working on this one. And what I want this to do is I'm going to use one for sort of a 15 pip target. There's 15 pips. That's about there. Top of this cluster. And I'm going to let this one run all the way down into, well, if we just say there, that'll give us £100 off that trade. As soon as this one is cashed out, I'll pull this to break even to see if this one will run. Job done. Simple as that. So let's see what we do with it, and I'll catch you at the end. Okay guys, hope you're well. I'm gonna let this play out. It's set up nicely. I've just had a bit check around, and well, it's turning 9 o'clock in the morning here, so Winky will be finished doing what she's doing. She got up and decided that she's going off for a wander. She's crazy, that girl. She likes to go and do half an hour in the gym. She's really mad as a box of frogs. Anyway, happy days. Straight out of bed and straight down to the gym. How mad is that? I'm straight out of bed and I look like I've just fell out of it. Anyway, what am I rabbling on about? Well, this one's fine. I've got an order pending just on the top here, because that's where I potentially can squeeze to. And then what we're going to do is we're going to set the targets to the base of this green box, which is here, this one. So that's fine. So that's half decent target. We could even set it into the middle if we so wish, but I think that's a nice area to set it, because that's what these boxes are, the ins and outs, if you like. So that side's fine. This side's currently in profit. We do have another pending order on this level. What I like to do is I break my positions up so I can manage them. It just means if I want to shut one off, I can, and I don't have to worry about it and all that sort of thing. It saves trying to do sort of mathematical gymnastics. I can just shut orders off. Another way of doing it is you could even open up 10 £1 positions, and each one of them's running on their own, and you just click them off as and when you don't need them. It's called racking and stacking, and I do it from time to time when I've got time. And I'll probably get more into that this year because I am sort of moving my position size up to about a starting grid, whereas normally I would start at about a fiver. For the year coming forward, because I've had a really good year, it's probably going to be about between 6 and 8 quid I'll be starting. And why am I doing that? Well, I'll be doing the same job, but I need a pay rise. And I've got a bit extra money for the pot from last year. And that's something we'll touch on in the future. But in the meantime, as you can see, there's only these two running. One's cancelling the other out, making the loss relatively small. There's the orders that are sitting there, nice and simple, you know, so I'm quite happy with those. And then we'll come down into what we've already made, which is this lot. So we've got 156 already in the bag to play with. And now we're just waiting to see if these will trigger in, and that's it. I'm going to wander down, get a coffee. This is all set up. Targets are in place. As you can see, I'm just targeting here, which is basically, you can see this move here. And we've got these two candles. That was a decent power shift. In other words, strong directional move. And it's also the base of this cluster. Seems a logical place. So just targeting that area. And that's it, guys. Done and dusted. We'll let this crack on. Even if I killed it off now, I've made more than what the losses are, so that's fine. But I'll be able to monitor it down by the pool on my phone and just switch it off as and when. So I'm going to disappear off. I'll switch the camera off. And I'll come back to you a little bit later on this afternoon. Happy days. Oh, happy days. Oh, dear. Well, boys and girls, let's have a little look and see what we've got. I've had a great day down at the pool and wandering about. Managed this a little bit on my phone because I'd seen all the setups that I needed to. What I will recommend, though, is if you are going to trade on your phone, make certain you know what you're looking for first, because you can't analyze on a phone. So let me flick this on. See where we are. These are the two markets we were looking at. So we'll just switch all of these off. There's nothing available. Nope. Talking of things available, here she comes. Late as ever. Hello, my love.
Not late.
We're not that late. No, not to worry. She's good as gold. Good as gold. Anyway, what was I saying before being rudely interrupted by love of my life? And she can interrupt me anytime you like. What are you doing? Take your clothes off. Fantastic. Right, this might be a short video, boys and girls. Still got a bikini on. Right, okay. We're looking at primarily the DAX and cable, but I did slip in something else. And as you can see, there's nothing running. All the orders are gone. All of the orders are gone. And if we come down into the history, that's today. Okay. Oh. She's being naughty. She's wiggling her little butt. This is definitely going to be a short video, boys and girls. Naughty girl. Naughty. Do it again. Right, okay. As I was saying, it's done pretty much what I wanted it to do today. Followed it through. There was a little setup on USJPY that I saw, so I took that as well. I did drop that in the Discord just while I was messing about, because I thought I should. And what have we done? So what are we looking at? So if we look at this one first, what this represents, it actually shows how important levels are. Because there's the stall point here, this black line. Look how well that was respected. Then we had another one underneath, which is this red barrier. Again, respected. But when it went back up there, it stopped dead back on that black line and came back. Now, if we come through earlier in the day, stall, stall, straight up, stall. It just, the work constantly. Now, if we look over on this side, again, I've got supplementary stall points, which are here. And it went to them to the pip. Boom, boom, boom. Came down to the pip. Down into predetermined ones. Hold on, you. I'll just move the camera because she's being really rude. Yeah, you are.
You wish.
Do you want to see how rude she is, boys and girls? Yeah, I'll show you. This will sort you out. Bloody cow that you are. Hold on. Give me that bloody camera. Flick this over. Because she thinks she's clever. There she is there. Bollock naked she is.
I am not.
Pull the top down there.
No.
See, she thinks she winds me up because we do have a merry laugh in this house all the time. And, well, we just prank each other every day. So what was I saying about this? Rudely interrupted. I've lost my train of thought now. You rotten cow. Right, what was I saying? Levels. Why are they important? Because they actually show where the turning points of the market are. There we are. You see it come in, strong level, bounce, bounce. It's bounced there before, went up, stalled, dead on it. Dead on it. Dead on it. Dead on it. Every time. And we take this right the way through the morning, danced around the level, there it is there, back down into where it come. So even when you have your open, which is normally a move that'll flush you out, and it can be done in one of two stages. It can do it straight away, or it'll fake you into thinking it's going on a bigger move and then kick you in the nuts. So here it's slammed all the way up, making you think, yeah, we're on a run, and then it slammed all the way back down again. Slammed it back up, held around the levels, went up to a supplementary level, back down into a key level, to another key level, and then straight back where it came from. So one of the questions I'm asked quite regular is about directional bias. How do you get it right? Where'd you go? Well, my rule of thumb is I break it into 3 points. I have what I call a deep trend, which is the big picture. So it's like what your monthly, your weekly, your dailies, etc. are up to. Do they affect the next 10 minutes? No, they don't. But what they do, they give me a good idea of what the general market is trying to achieve. Then you have a mid-trend, sort of like your daily, 4-hour, hourly, for argument's sake. That'll tell you what's happening today. Now, ideally, if the mid-trend and the deep trend are running in tandem with each other, they're in the same direction, you've probably got a good shout at a bigger trade. If they're going against each other, then just be a little bit conservative. And then you go into what I call the now trend. And that's sort of your hourly, your 15, your 5 minutes. See what's happening on the low frames, what's happening right now. And again, you're looking for confluence. Now, you definitely want the now trend to sort of be aligned with the mid trend, because then that way you've got the wind in your sails and it's relatively easy to score some pips. If you're going against it, that's when it becomes dangerous, because the market can turn at any one time. And you've got to be a bit careful of that. So that's why levels are important, because they'll show you the stress point of the market. It's why good indicators like a Bollinger Band is very important. On its own, not so much, because it's not a trigger and it's certainly not a direction picker. It's a stress test of the market. It'll show you where it's stressing out. In other words, where it's stretched to. Because if the price is outside of Bollinger Band, that market is incredibly stressed. You know, it's stretched to a point and the stress levels will come in. And that's where fear and greed comes from. because that's all the waves of the market are. They're just stress points in the market, you know, where people want to do business and they either want to get out of trades or they want to get into trades. Simple things. Then look at something simple as an RSI. How far is that up the scale? Well, if you're going to be shorting this thing, you want it as high up as it can get. If you're wanting to go long, you want it as low as it can get. Why? To give it room to breathe. It's that simple. Trading's not that difficult. The hardest part, and I've said it for years, and I'll say it for years to come, is you. It's because you're looking too far into the chart and you're trying to catch all the micro moves. Well, sadly, because the market, as I've just shown you, goes up and down like a yo-yo throughout the day, you just get yourself stressed out. You can't see where you're going with the market, and inevitably you pick the wrong direction. But if you had a single direction from a good conviction, well, I've also just shown you that the market does go both ways. So your conviction's more important than your bias. So if you've got a conviction to the short side, you wait till the conditions tell you it's short and you go with it. And once you've paid, walk away. It's that simple. And then as you get more confident and you get to see it more and more, then yes, take another trade. Or yes, take another asset. But up until that point, practice less is more. Just get in, get out, walk away, do it again tomorrow. And you'll find you have more money at the end of the week. So there we go, nice and quick. It's the last day of my holidays today, so the chances are I'll not be doing anything tomorrow because I'll be traveling all day. And I'm not sure whether I'll do anything on Wednesday either because I'll probably be tired. I'm not going to get back till the small hours of the morning tomorrow. But if I do, happy days. And if I don't, I'll be back in a couple of days. So as always, guys, trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.